Morning, traders. This is Blake Morrow. Just making sure you guys can hear me. We are having a little bit of a audio issue with Dale. Let me know if you guys can hear me okay. Just here, let me get over here just to make sure you guys can hear me. Test, 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 test. Can you guys hear me? Yeah. Okay, great. Okay. Well, just want to let you know that we're here. I think Dale had to go restart his computer. Zoom, who does we use the webinars here for Zoom. I think he had to reset. There was like an update overnight, and so he's having some computer issues currently. So anyway, let's talk about the markets a little bit, and let's see what's going on. And I want to ask you guys this: does anybody use TradingView? Anybody use like the charting platform TradingView? It's interesting. I actually use it over Bloomberg. It's so funny because I spend so much money on Bloomberg every month, and I hate the charting platform. So if you guys use TradingView, let me ask you: are your charts loading slow? Look at how slow my charts load. Here's the cable. Look how long it's taking the cable to upload. And yes, I use the pro version. Jeff says it is slow today. Mine's usually really fast uploading the data, and I don't know why. So I just wanted to know if it was like a North American issue, maybe it was a server issue, because if I'm like, if I'm on other sites, like this is, obviously ForexAnalytix, everything runs, smooth here. You can see, just getting everywhere around. So it's not, it's like, here's Forex Factory, just to give you guys a, kind of a, it's not my internet. I run fiber at my house. So
Blake, good morning.
Good morning.
My TradingView is very quick as always. So maybe it's something to do with North America. I don't know.
I think it's North. TradingView has servers all over the place. So I'm, wondering if that's really the case. It might actually be the case. So, I think it's more of a North American issue. If I still have this issue going into tomorrow, I'll be a little bit more concerned. But yeah, look, like here, I'm pulling up the peso, like super slow to upload. Anyway, okay, thanks Stelios, and I just wanted to see if anybody else was, having the same issue. It sounds like some of you guys are not, but I actually think it's more of a server on their end, somewhere where I'm, North America or part of North America anyway. It's dealing with it. All right, so let's since we're waiting on Coach, and we'll see if he hopefully we'll get here sometime here in the near future. Let's talk a little bit about what's going on now. As far as the market goes, this China CPI came in a little hot last night, and if you guys have missed like the news over the last couple of months, there's a big pork shortage in China, and that's starting to affect a little bit from a consumer price standpoint. That's kind of affecting them, but overall the market's been very, very quiet. S&P futures are up a little bit currently. We're still not as high as we were on Friday after the announcement. So the S&P is still brushing its head up against the 78% retracement. I'm a little skeptical of stocks up at these levels. I think that if we can't break the highs from Friday, which you can see right here is about close to 3,000, I think the risk of the stock market pulling back from here is a little higher. I think that we can pull back towards 2,900. Are we going anywhere? Are we going to go any higher or lower from here, like substantially? I don't know. The jury's out. I don't think I have enough data in front of me as far as understanding, the magnitude of the trade deal, if you will, to make any judgment. But just looking at the S&P here, and Andre, he may chime in here in a second if he's listening in. Sometimes he's listening in. I'm gonna draw this for you on the S&P. All right, there's a spike low, high, low. That is pretty close to a Gartley pattern. Let me now get specific. So this is a 78% retracement. Okay, right there, or 7.6. Some of you use a little bit different. 161% extension would take us right around here, close to here. This is an 88% retracement, something like this, right? And so we were pretty damn close. So from my point of view, as long as we stay below 3,000, the risk is lower. Now, are we, like I said, is it, is it, are we going to go from 3,000 down to 2,700? Probably not. I would assume at this point that we're just in this this wedge, this longer term. Let's go ahead and reset that longer term ascending wedge in the stock market. But again, I think the risk reward is more tilted towards shorts up here. What I'd possibly look for, if possible, here in the next couple of days, let us hit a new high. If we hit a new high towards 3,000, that's probably even a better entry than just trying to short the stock market at current levels. But I think the risk is that we pull back. We got the phase one, quote unquote. Don't even know what the specifics are, but trade deal being over, at least near term. Or we've gotten through it, then I think the stock market could continue to roll over. The pound a little stronger today. Maybe Stelios, since he's listening in, maybe he might be able to mention a little bit why the pound's a little higher this morning. Good morning,
Good
Stel.
morning again. Yes, we had a bit of a continuation from yesterday. Basically, Barnier, the chief negotiator on the EU side, said that the Brexit deal is possible this week. So that was some pretty strong words. And he said that negotiations are intense. People are working hard. There are good intentions, blah, blah, blah. But still, this is all very constructive in my opinion. And I remain of the same view that eventually, I don't know if it's going to be a good or a bad deal, if there's going to be an extension first, because clearly there's only 2 weeks left. So, what can they put together within that time and vote it through the House of Commons and get, it's going to be a race against time. I still think the most probable scenario is they get some kind of extension. It has to be voted unanimously by the 27 member countries. Remember, they've done this once before, so there's no reason why, even though quite a few countries express their distaste they don't like the fact that there might be another extension. I think they're going to vote it through. So we had some more positive comments, basically, to sum up. And the whole ambience and the whole atmosphere, I think, is getting better and better, more constructive.
Got it. All right. Well, as I mentioned yesterday, Stelios, when I'm looking at the cable, as long as the cable's below the 200-day moving average, I'm skeptical. All right. I'm skeptical of the current rally, but a move above the 200-day moving average, we also clear this downtrend line that's been in existence since, what is this, April, right? We get above the 200-day moving average. We basically clear 127, 128. That's really technically very constructive for bulls. And, I'm not long. I'm kind of thinking I, should be, but I'm not. It's still, very confusing. I know we're in this like tunnel, information time where we're not supposed to be hearing anything. But why are we hearing from Barnier at this point in time?
Well, they're the negotiations are still ongoing, right? So there are people from both sides, I guess, trying to appease the markets. I mean, I'm not 100% sure. One thing we have to note, and thanks to our friend Nitish in the chat room, he posted today, he said, look, when the first withdrawal agreement was taken for a vote to Parliament by Theresa May, cable was at 133. So that shows you we still have quite a long way to go. If this thing starts going and if we break these levels, I think there's going to be just clean air above. But yeah, I mean, like I said before, there's comments from both sides. I think what's the intention of that? I guess trying to appease the markets, and just show, look, we're doing our best, and maybe a deal will be struck.
Yeah, and Scott mentioned another EU summit on Brexit announced for October 28th if deal not done in the next 48 hours. I mean, that the thing is we're going to go down to the wire, and it seems like to me, and I think that if you are trading, you see how dangerous it is. Even yesterday, I mean, if you were trading the cable, on the long side yesterday, you might have gotten walloped a couple of times. It's like it starts to come off and then it spikes up and you're like, oh, look here it is. I'm going to get long again. Then the bottom sinks out of it. To me, it's a little scary buying here while it's below 127 and we're so close to it. I think the risk reward from a trading standpoint is actually skewed to the short side at this point. That doesn't mean I'm going to short it. I just think that it is. And I think a move above 127, then I'll feel a little better about, maybe, picking up some longs, because then I'd know where, the line in the sand is if I'm going to get long. Now, one of the other things that I have to mention is before I left for California last week, when we had Parthenon Economics, chief economist from the UK, Ian Shepherdson was visiting our office in Greenwich. You're taking somebody here. It looks like Coach is logged back in or is logging back in. When Ian Shepherdson was here, he even stated, I don't know what to believe, and he's from the UK and he's from London and he is confused on Brexit, and he is the chief economist of Parthenon Economics. So for me, if he stated that just tells me that I really have no idea what I should be doing here, and therefore I'm going to leave it alone. And that's really been my stance with the cable, unless there's a headline that says decisively Brexit is happening or it's not happening, like no deal or deal Brexit, then I'm gonna leave it alone. And that's the bottom line with the cable. Let's take a little bit of look at the euro, and then I'm gonna let Coach come in. Coach, are you here? Can you hear me?
Yes, Blake. Yeah.
Hey, man. What's going on?
Technical. You know how high tech I am.
Yeah.
So anyway. Here I am. I got the hamsters spinning the wheel for power right now.
Oh, cool. Well, hey, I'll let you think about what you want to say here in a few minutes. I want to talk a little bit about the euro. This has been a support resistance zone that I've had drawn out for days. I mean, you're talking last week, okay? If you go back to last week, and I've had this, drawn out for, like I said, weeks. This has been a big, support resistance zone. Held as resistance, knocked our head up against 110, continue to knock our head up against 110, 109.90, 110, broke. Now we're testing it back on the downside. Here we are again at around the 110 level. It's a big area for the euro. It also, if you look at the 4-hour chart here, it is a broken trend line. We're retesting the broken trend line, as you can see right here. So I think the euro at this point in time, we might dip below 110. We might dip back down to 109.90. You got to watch the euro down here. I'm not long the euro at this moment, but I think risk reward favors longs, especially if we get a dip below 110 and you just want to take a little stab at it. Draw this trend line up here through that, just like that. So we get a dip through 110, you might be able to get to 109.90 and then, picking up long down there doesn't seem like a bad idea if you ask me. Now, whether you want to trade the euro dollar long or maybe even take a euro cross, like I was long euro New Zealand overnight. I already got out of it. I got out of it at 62, 66 this morning, right off the highs actually. If you were in the chat room, you knew I exited up here. It was literally like, I guess it was like within a pip of the highs. Got kind of lucky, but I've been buying the Euro New Zealand on these dips here. I actually think the Euro New Zealand is breaking out. I think it's not yet. Let me rephrase that. I think it's going to break out above 176, which is the trend line from 2011. Basically, look how slow my charts are loading. Oh my Lord! Like, oh my. God, my charts suck. Dale, are your trading view charts slow like mine, or is it
everything's molasses today?
Oh,
So,
I want, my euro, like you can see in my trading view charts, it's just taking forever to load up. And I was showing everybody else, it's just trading view. It's like my other, like everything else is working fine. Like ForexAnalytix is great. It's just, it's something with these charts, maybe a server that we might be hitting. You're on the West Coast like I am. But anyway,
yeah.
I'm looking for the Euro New Zealand to eventually break higher. Look at that relative strength. Look at that consolidation with RSI. I'm actually looking to play it to the long side. I bought the dip overnight. I sold it, got out near the highs. But, like I said, if you don't want to play the euro dollar long, playing the Euro New Zealand or something like that might not be a bad idea. But anyway, that's just some thoughts that I have currently about what's happening. So, Coach, how about you, man? What have you seen overnight? What have you been thinking overnight? Maybe if you want to take over the charts and if there's anything specific that you're looking at, you don't have to. I'm just
all right. We had that nice rally in yields, and yesterday I talked about pullback in yields, and I thought the yen would pull back too. It started to, but it really isn't.
Well, the bond market's open today, so now we're starting to see yields pull back a little bit.
Right. So I'm figuring 10-year maybe back to 160. It has to hold, but I think that we're going to make maybe it won't even be that deep. I think we're going to challenge the highs we had about a month ago, over 190. So, but maybe we get this pullback before that happens, or this is it. But I still think yields test 190, 2% on the 10-year, and even a little bit more negative the long end of the market. So
if we see yields come down, one of the things that you're going to naturally associate with lower yields, and what I would, is that we might see stocks under pressure a little bit. Yeah. So the stock market might be under pressure just a little as if yields do end up coming down, which you came in a little bit late, Coach, because you were getting your computer up and running. But look at the S&P. This is something that I drew up this morning that I think it's worth noting. My super
that 2980 level's big.
Well, yeah, like look at this. This is a Gartley pattern. Basically.
Okay. Is it complete, or it would have to go up to D, or that would enough?
I think that D is possible up towards. This would take us to the 88% retrace. 161% extension, but harmonic patterns to me are kind of like
be alert for reversals.
Horseshoes and hand grenades.
Yeah.
I know people try to look for precise entries when you're doing harmonics, but the fact of the matter is algorithms are programmed to really look for these numbers and really undershoot or overshoot these numbers. So could we the move close to 3,000, did it count? I don't know. I think it's close enough for, like I said,
government work, and also
and grenades.
And also don't expect perfection at the crap table. And that's what this is in many ways. So
Yeah,
Yeah.
and so I think if we broke yesterday's lows, which would be 2950s, 2955, which is 20 S&P points lower from where we're currently at, that would signal to me that we're probably heading back down to 2900. I told people a little
Yeah.
earlier this morning, if you can get a move to new highs, like 2D, which would be 3000, that might actually be a better risk reward. We may not get there though. That is the quagmire that you might be dealing with at this moment in
What's
time.
a major event this week news-wise, Blake?
Well, we got a few of them. I mean, really, you got retail sales that's tomorrow, out of the U.S., and then
We have all those bank earnings today.
it is earnings season is kicking off. We have Goldman this morning. And so a lot of people are looking at possible revisions. And then I think the big data actually is Chinese GDP on Thursday. It's Thursday night.
Okay.
So
All right.
that might be something that that we look at. But
Like,
yeah,
sorry to interrupt. We also have CPI tomorrow. Quite important ones: New Zealand, UK, Europe, Canada. So it's
actually, New Zealand
important.
is today, or
in a few hours.
In a few hours. And a matter of fact, that's one of the things that I was trying to position for with the Euro New Zealand long. I'm hoping what I'm hoping for is that the Euro New Zealand dips again towards 175. I want to buy it, and then we get a weaker New Zealand CPI a little bit later today, or tomorrow morning in New Zealand, and hopefully that happens, and then we get a eventual breakout above 176 in the Euro New Zealand. I don't know if that's going to be the case. That's kind of how I want to play it. What I try to do is I try to position myself in a position with a good entry ahead of some data that I think is going to be influential in the market. Like, for example, I'll just give you an example of that Euro New Zealand, which Stelios so keenly mentioned is with the CPI coming out later. So what I'm hoping for is that we get a dip like this to 175, and then then it bounces back here within the next imagine this is like 6 hours from now, and then we get a weak CPI number out of New Zealand, and then the Euro New Zealand actually breaks higher, and that's going to be the catalyst that drives it higher. I don't know. By the way, the Euro dollar just dipped below 110.
Important area to you, Blake? 110, 109.80?
Yeah, 109, 109.90. And like I said just a moment ago, if you guys are looking to pick it up long, it's going to be, down here is the place to do it, in my opinion. 109.90. If you're out scalping around, you're looking for a little, something to play. I think that's the trade is buying these dips down here in the Euro US dollar if you can get it. But anyway, Ziggy said bank earnings, Wells Fargo just reported 26% loss.
The S&P's
really? Wow.
Loss? Wow.
Huh. Let me see here. Looking around.
That's because they can't open 1 million fake accounts anymore.
I guess that might be.
That can affect earnings when you can't fabricate.
that might actually do it. All right. Well, hold on one second. I'm looking around here. You know what else is something that's really stuck out to me recently is look at how weak the commodity currencies are. Like look at the Kiwi, look at the Aussie. They're just trading really heavy, and they're trading poorly. One of the guys from my office yesterday was saying regarding the Aussie and the Kiwi is they're really showing you how this China-U.S. trade deal, they're not buying it basically. The Aussie,
good point.
They're actually trading really, really heavy. Stelios, do you have any comments regarding anything that you're seeing in FX? And I haven't seen Steve this morning, so we'll see if he even pops in today.
Well, really, we've mentioned the big issues, right? The US-China deal and the UK. I don't see anything else that's really catching my eye in terms of moves, apart from the usual. I actually made a pattern play yesterday about, again, Norway just looks completely mispriced to me.
Yeah,
So
well, that's the thing with like the Aussie and the Kiwi. We keep, I'm talking about the commodity currencies are extremely weak. I mean, look at the U.S. dollar, Norwegian krona. I mean, this thing looks like it's going to break out again. You know,
yeah.
I know you're extremely bullish on Norway's economy, but why is it that the Norwegian krona is as weak as it is? I mean, dips have been extremely shallow, has not pulled back at all. Anything that sticks out there? Um,
That's a $1 million question, isn't it? I don't know. From what I can see as well, the central bank is not really doing that much with its reserves, and usually they come in to sell kroner to buy euros. But from what I've seen, what I've read, they haven't done that much, so you can't attribute it to them. So I don't know is the answer. Their inflation has been dropping. That's the main problem ever since they started hiking. They've done 3 hikes now, haven't they? Yeah. So
and 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 Nitish, he mentions that the Norwegian central bank says they're not raising rates anymore, but no one is. Who
yeah,
is?
exactly.
Since
That's
last week,
expected.
guys, maybe still, the U.S. dollar Swiss has been very stiff, even during periods of dollar weakness. It doesn't go down.
Well, the Swiss is, in my opinion, just driven by the S&B. So,
Okay.
I mean, not obviously not completely, but it's it's the biggest player out there. So they will come in and they will work in the FX market. So that's why I rarely trade the Swiss.
Yeah.
Actually, almost never traded it. But the krona is a
See,
different thing.
Blake, it
And
looks like it wants to break out there a little bit,
Yeah. I mean, we're in this like up channel. Here's the thing about the Swissy. I actually want to play it on the long side. I know it's sounds crazy, but I actually want to play the Swiss long. I want to be long Swiss francs. Now, that doesn't mean that I'm doing that today. That's something that as soon as I smell blood in the streets, whatever it is, S&P down 5% for a reason. Give me a reason. China U.S. trade deals off. No deal Brexit. I don't care. Give me some sort of reason where I sense there's blood in the street. I'm going long the Swiss franc. I'm actually going to get long because I think everybody is, very short. But the trick is, especially when you're trading, like for me, it's when I trade reasonable size. So I can't just short the dollar Swiss, be long Swiss francs, and then carry long Swiss francs for a long period of time. It hurts from a
Carrying charge.
a carry. Yeah, I'll get negative carry like it's nobody's business, and so I've got to be right quick. So for me, I want to be long the Swiss franc. I want to short the dollar Swiss, but it has to be the right time. It has to be the right day, basically. And really what I think is going to happen for me personally is it's going to be a break below this 98-cent level, which is a multi-year trend line. But it's going to coincide with something. So, are we there yet? No. Am I shorting it today? No, I'm not. And here, the euro is really BOE saying stimulus is needed if Brexit uncertainty entrenched. Well, of course. I mean that's like people are trading off these headlines too, which is crazy because you just saw, if you're watching the cable actually just sank a few pips, but it's like, okay, that if there's a no deal Brexit, we're going to have quantitative. The Bank of England is going to go straight into negative rates. I mean, they're going to have to, right? God, look at my charts. This is crazy. My charts are like molasses here. This is really ridiculous. I can't even pull up like 1 minute charts. Here's my 15-minute chart. This is crazy. Okay, but as you can see, the pound actually it sank to 126.20 and then right back up again. Yeah, I don't know how people are trading on those comments. See, what did the euro just dip to? Dip to 95. Yeah, I think if that might have been it. Hell, you know, we got this little dip in the euro, and that might have been all she wrote. But we'll see. I like I said, I want to play it on the long side down here. If it does get to 90, I'll be a buyer. If not, I'm just kind of standing around on the sidelines today because there isn't a whole lot moving. I mean, if you look at the ranges, the ranges that we've seen in the currency market thus far, I mean, the euro dollar is at 40 pips. The cable's obviously got a 100 pip trading range, but it isn't even a lot for the cable for the last, several days of trading. The Aussie's still trading pretty heavy, but still less, well, about a 40 pip trading range in the Aussie. Kiwi's trading heavy. Kiwi's got a little bit more of a range here. Dollar Canadian continues to be very tight. Look at how tight these ranges is for the dollar Canadian. This is a 20 pip trading range thus far. You can see basically we're going nowhere quickly. So there's not a whole lot happening right at this moment. But damn it, this euro, I'm a little upset because I'm kind of thinking that might have been it. That dip right into the support zone might have been it. Damn.
Yeah.
Damn it.
It's not late.
No. One of the other things that I'm kind of paying attention to here, and I think that we need to focus on just a little bit, is we need to focus on these precious metals. If you look at the daily charts for like gold, okay, gold is in a very, very tight consolidation here. Stelios, let me ask you this: you still bullish precious metals?
I am, yes. In the
I think you
medium
need to
term,
be.
yes, I am, yeah.
I think you need to be. I mean, look, we had this massive rally in gold the last few months, since basically, since May, all summer long. The pullback has been very minor. 618 retracement there. If you look longer term, from like the summer, not even a 38% retracement. Not even a 38% retracement at 1450. And now we're just working off, we've completely worked off overbought conditions with gold. So notice where relative strength is, right? Let me draw it here.
Yeah. Looks
relative strength is back to the 50, which is now we've worked off the overbought conditions. We haven't pulled back, or very shallow pullback. In my opinion, gold's ready to rally. And I'm not long, but I think we need to pay attention to that because, as an FX trader, if you see a rally in gold, that's going to tell me two things. Euro's probably going to go higher. Dollar yen's probably going to go lower. Or the yen's going to strengthen and the yen's going to strengthen. Sorry, the dollar's going to weaken. So, the gold chart this is a bull flag pattern or a pennant, right? That you see here.
Yep. And
it's a very, very bullish chart. Very bullish.
Maybe one more trip down to the bottom red line.
I don't know. I mean,
drive it.
I don't know. I think that what would drive it if my guesstimation is correct, and again, this is more of a guesstimation, is that seasonality is going to play into equities coming off here. And I think it's going to be this week. I think equities come off, gold rallies, yen rallies, dollar sells off, the whole kit and caboodle. I think that's what we're looking at this week is, gold's going to plow through this 1510 level. And once it does, once we break through this upper trend line, then that's the
heck of a flagpole.
It is. I mean, if you think about where that can go, I'm going to have very slow charts, so this is just bear with me.
So you get your 1700, Blake.
16. If you go from that 618 right there, that would take us to 1750.
Wow.
Yeah, I mean, and then, if you think about that, sorry, I
It's
let all the
almost back
data.
to the 2011 highs for 19. Almost there.
Yeah, I mean, here we are at like, 1750. Neil says, do you look at COT for gold? Yeah, from time to time. I know the market's pretty long gold, but you know what? Um, CO the COT data and sentiment and that does weigh on my decision when I'm looking for reversals, but the crowd can be right.
Yes.
So don't read too far into it. If the typical trader mentality is always, I want to fade whatever everybody else is doing, but that's a flawed way to trade all the time. And that's where traders usually get in trouble, is because they assume that we're going to be range bound all the time. And I do think we are range bound more often than not. I do think that more often than not we're in 70 to 80% of the time we're just range bound, and then the remaining 20-25% of the time we're actually trending. I think gold is a very strong bullish trend. I believe it's an extremely bullish trend. So if you guys are trying to fade gold, you got to be really careful here. There's a lot of reasons why gold is going up, and gold's going up for a whole host of reasons. And whether it's political, whether it's inflation hedge, whether it's just a complete disdain for currencies in general, and just one some sort of safe haven bid. The gold, I think, is the place where you really want to be. And I've been really bullish gold all summer, and I continue to be a bull despite some of the positioning data, if you will. But you can't fight trends. When they start, like I said, there's that 25% of the time, Coach, and you've seen it,
Yep.
right? I mean, look, we've seen it. We've seen it in equities for 10 years. The market can stay irrational longer than you can stay solvent. That's why, as a trader, you have to be very, very careful about constantly trying to fade big trends, because when a trend starts, you just don't want to get in front of it. And this is one of those situations where, hey, in my opinion, as long as gold stays, let me reset this. As long
And
as
there's
gold
no
stays,
opportunity costs with rates being negative in many parts of the world. I mean, that was a big argument against gold. You get 3% on your money, that's competition. You get 0 on your money, there's no competition
right?
for
Yeah,
gold.
I mean,
You know, it's that simple.
we're in a zero rate environment, right?
Yeah,
Well,
negative. People are paying to own bonds.
yeah,
You know,
it's
you know how old I am, and I've never seen that.
you are, and I mean, you talk about Dale. Dale is a dinosaur. He's like
I
Dale's
think
been Dale
I
started
think
trading
during
with
a yeah,
you ran the ticker tape.
yeah, no, after Gettysburg, we had rates that low. Yeah.
So,
But we needed it for reconstruction. So
oh man, that's funny. So what else is on your radar, Coach? Because I mean, I'm gonna stay along the theme of gold, but I want to hear what again, you like to provide us your very, and by the way, very valuable, insightful thoughts first thing in the morning. When you first joined our team, um, uh, this was just so you guys know the conversation that Dale and I had. Like, how many years has it been? 2.5 years,
yeah,
3 years, something like that. So I don't.
yeah.
I'm very, very bad on trying to keep track of anniversaries. Ask my wife. Horrible at it. I a time just passes, and I'm like, whoa, it's already been so many years. But one of the things that when Coach and I first started working together, and he was hosting, because we brought him in as the host for the face webinar, because he's been a host for so many shows over the last 10 plus years. uh, it was that he was just a host. Well, that was his quote unquote what we brought him in for. But I'm like, man, you got to tell us your thoughts are. Take the first 10, 15 minutes of our face webinar and tell us what you're thinking, because you have so many years of knowledge behind you. You've seen so much that your thoughts and your opinions are very valuable. And so, with that being said, we missed the first 10 minutes today of having you here. So what other thoughts do you have about the current environment that's keeping you up at night, if you will?
Okay, I'd say the repo and funding market bothers me because you're always worried. For years we've heard things about market structure not being the way it is, and markets have been hollowed out. There's no open outcry. During negative market environments, you had specialists on the floor to kind of not just have circuit breakers, but make a market. And now it's just machines. And I'm concerned with what's happening in the repo market, that um, there's a liquidity problem beginning to develop that may spread from that market into other debt markets. So, as easy as monetary conditions are, I think it's pretty um, uh, a little bit worrisome that the Fed has had to come in, and they've made, given reasons like corporate tax payments and that. I just think it's the beginning of disorderly markets, and it's something to keep an eye on. It hasn't spread, so keep an eye on HYG, like junk debt, and see if the spreads start to change. But I think that's a problem with what's happening in the overnight market, because the narrative has been, oh, well, Europe never took care of their banking issues or cleaned up their balance sheets, and we have here in the US, we have no systemic risk. Well, then why are people bidding twice the rate just to have overnight funds? I don't get it. And I think there's a problem with liquidity, and you hear the opposite. There's so much liquidity around, it's sloshing around, and that's why people are going out on the risk curve. Then what's wrong with this market, that people have to pay up just for money to have overnight?
Yeah.
That bothers me.
It does, and the question is, and I think it's more of like a, and I know, we've probably been mentioning this for a while. It's like a slow moving train wreck that you're watching. You're witnessing it happen as it's happening, and that's why I'm very, very, very nervous that equities, we're getting towards the end of our rope, and I'm I really want to position myself kind of short risk, and I'm hoping that it starts show its rear its ugly head going into the end of the year. And it starts, it starts off with, you see, I'm looking at a 4-hour chart. It really starts here. It's not so much, you look at a daily chart and you go, oh man, the market's so bearish. Anybody you talk to, anybody like that's non-market, affiliated, they're gonna say, well, stocks are up, and they rightfully are. What they're not, seeing is that stocks really haven't moved a whole lot since last year. At this point, we're if you take the end of last year, well, I guess December of last year we were actually significantly lower, and we can, if we mark from like September of last year or October of last year to where we're at this year, I mean, not a whole lot's moved since then. But I think that we're starting to see some cracks, and so for me, like I said, it all starts in a like a 4-hour or 1-hour chart. I want to start seeing a break below 2950, and then a break if we break below 28, let's just call it 2880 by the time we get there. That to me might signal that a longer term top is in stocks, and I'm looking for reasons to be short. And I know I've said this a couple of years back, and I'm going to say it again, that now that, you know, China, US have met and we've got a semi quasi trade deal, I am looking at short risk now. And I think that these funding issues that coach you were just talking about, I think that is going to be a bigger issue moving
You
forward.
know
And
what
that's
else bothers me, Blake, is you're showing this in this huge range we've been in for a year. It reminds me of the huge range we've been in the dollar and the euro, and it's almost like markets are being collared. That's maybe the goal of central banks is just to collar them in the range,
mhm.
and
Collar
that's not
meaning
great.
meaning it's everything's hedged within a range. That's why there's so much gamma
Yeah,
around it. So like you look at
yeah,
all the options expirations in the euro each and every week. You know, you're talking, you know, billions of dollars expiring on a daily basis around the 110,
yeah.
111 level. I mean, it's, you know, they're keeping
There
the
are no
market.
trends. You have sideways, range-bound, compressed markets that make it more difficult unless you trade off a 1 hour, 30-minute, 15-minute chart to be a swing or position trader.
Right, exactly. So, so in you know, in essence, you know, I think something's going to move the market, and something's going to do it soon. And you know, I, I'm hoping, because obviously as a trader, we're just hoping for some you know, some volatility, and I'm hoping that there's going to be a reason for the market to be breaking out or breaking down. You know, and I still can't shake the idea that we might hit new highs in stocks. We might actually, you know, a lot of people look at the stock market as a big megaphone formation, right? I mean, it's a,
Yeah,
you know, the big, you know, what everybody thinks is quite possibly a longer term, you know, looks something like this. I don't have to get too
yeah,
specific about it, but it looks something like that, like a
yeah,
big megaphone
yeah.
formation. I mean, it might. I don't think it's very symmetrical, you know. So I haven't ruled out the move up to, you know, 30-50, but you know, based on what we got over the week last week with China, I was hoping we'd break above 30-50. I was really prepared for it, being long the New Zealand yen last week, but it just didn't happen. And you know, we're falling short of, you know, highs once again. So you know, there are. I want to see. I want to see. You know, kind of some evidence of why I should be short risk. One of the other things that that if the stock market does sell off, and one of the reasons why I actually want to be long the euro, and I'm a little bummed out because I'm thinking that that might have been it, that move down here. We might get down to 109.90, but I'm kind of thinking this might have been it. Is if stocks do start rolling over, like let's just say today, I think stocks today, tomorrow, they might start actually showing a little risk off. You actually want to be long the euro in that situation. You want to be long, you know, the currency that has been the funding currency of the last couple of years, which is the euro. People sell euros and buy everything else. I think that that trend reverses and the euro starts heading higher, and we're already starting to see signs of it. We're seeing, you know, the euro pivot off the lower end of the big long-term descending wedge this last, you know, 2 weeks when we hit the 109 level. But I think the euro is at risk of a significant rally and a squeeze. If stocks start to roll over, I think that's where, you know, money is going to be at. I think the money is going to be, you know, the euro reverses, you know, quite aggressively. That's why I'm just trying to buy dips when I can find it. I'd rather, you know, if I'm not going to play the euro dollar, I'd rather play the euro against crosses. That's why I've been trying to target this euro New Zealand to the upside. Then another currency you might be able to trade like that would be like the euro Aussie, which I think is going higher. You know, and I'm not long, but I think the euro Aussie is a, you know, potentially could squeeze up quite substantially. And you look at the basing patterns of some of these currencies, like you know, the euro Aussie and the euro New Zealand. And here's the euro Aussie. Trying to get more of a longer term view here. Let's do this. Let's see how slow this data comes up. If you guys are just tuning in, the one thing that I'm witnessing here on my computer, and is just the very slow uploading charts from TradingView. You know what I'm wondering? But you can see it. This is a weekly chart of the Euro New Zealand, or Euro Aussie, very big basing pattern. Euro New Zealand, very similar. Slow going. I'm wondering, try this. Yeah, it's slow on every feed that they're pulling up here. But look at these basing patterns for, like, this is the Euro New Zealand. Like, I mean, if this thing breaks out, look at how aggressive that could be.
Yeah,
I mean, really
huge.
You know? Yeah, I mean, it's huge. I mean, this is like one of those that, you know, we could see two rather quickly.
10-year formation.
Yeah, I mean, yeah, exactly. You know, just long-term base, you know, and these could really break out. And that's why I'm very skeptical being short the euro dollar. And you know, one of the other things about the euro, Coach, is that everybody's bearish the euro and the eurozone. Or, you know, it's, yes, I understand the German numbers are crap, and yes, I understand the eurozone's, you know, in a pickle here, especially with the UK leaving. But those are if you think from a a contrarian standpoint, you know, maybe that's one of the reasons why you get this massive, you know, squeeze in the euro dollar at some point, because everybody's short, everybody's bearish, everybody's expecting the euro to trade down to parity, and everybody's short euros, long everything else because of the you know, the carry.
You know what could temper people's bearishness on euro, and you know, over the last month since the bunds came off in that dramatic fashion about 3 weeks ago?
Yeah.
To me, it looks like their treasury market, which led rates down, are weaker than our treasury market. See, we haven't done what the bunds have done. We haven't taken out that low on our treasuries. So the bunds led it on the way up, and that was euro weakness. See?
Yep.
And if the bunds lead it on the way down, that should be constructive euro on, you know, on just the rate differential. Not because their rates are going to go higher than ours, but the pace of rates backing up for a while seems to be the bunds are doing it, completing that mission at a faster pace than our treasury.
Okay. So yeah, and thanks for your thoughts, Dale. And that's a really astute comments.
Yes.
And see, this speaks your 400 years of wisdom.
Yeah.
Yeah.
And Steve noticed it too. It was real impulsive, the first move down in bunds, and I mean, there you see, bunds are making new lows on this correction, and
Yep.
treasuries have not done that. So
no, they have not.
That favors the euro.
Yeah.
For the first time in a long time.
True. That is a good point. So Jeff says my trading view speed is back to normal now. I'm in the Midwest, and Forex Gal said I'm here in New Jersey and my trading view is okay. Well, hopefully it hits us over here, because it is driving me bananas. Like, you know, I'm as you guys know, I trade intraday and I trade pretty aggressively, so I'm flipping through charts all day long, and this is like not going to work for me. This is like this slow as molasses charts, and they actually do feel like they've sped up a little bit. The charts are loading a little quicker. I really do feel it's more of a trading view server issue, and we're probably I'm probably being rerouted where I'm at. Like, I'm hitting one server that's not working, then rerouting to a different server. You know, and I think that's probably that. I'm assuming they run off of, you know, some sort of cloud servers that might be down right now. But anyway, you know, good stuff. You know what I haven't done in a while, Coach, and maybe what we should do, because we were looking at the S&P. Where our focus is here, obviously, on, you know, I'm all, you know, all about the, you know, what happens at 3,000 on the S&P. Yeah. But what happens, you know, let's take a look at the NASDAQ and how that's been performing.
The internals, I read Jim last night. The internals in NASDAQ are much weaker
You
than
read Jim. So explain
yeah.
to me what you mean by that.
The internals, the number of stocks above certain averages, the AD line in NASDAQ isn't even close to making new
No,
highs.
but what you're talking about is Jim Welsh,
Yeah,
correct?
Jim Welsh, yeah.
Okay, so for those of you that don't know, that's probably one of the interviews that Coach does on I would say monthly or every other month basis. When he has Jim Welsh on, it's such a great interview. It's because Jim gets it. He's one of the guys that, like, in my opinion, he gets it. He gets what he knows what he's looking at. So
Yeah, he started out being a Fed watcher. So, I mean, that was it. The financial commentator was about, following the Fed and trying to understand what they're doing.
yeah,
Kind of like
look
Marty Zweig.
look at the Nasdaq 100. Just give you
Yeah.
some, just some a view here. And matter of fact, this
Oh,
would
look
be
at that.
a big triangle.
Yeah.
If you want to talk a little, Andre-ish, 618, 618. There's another Gartley, right inside of
Interesting.
inside of a triangle. Not perfect, but I mean, you get my
and you're getting a little potential reversal today.
Yeah, I mean, again, this risk reward favors shorts on the Nasdaq 100 here. And
yeah, you could do with stops over the high of the day.
Yeah, or maybe stops over
Tolerance.
Friday's highs.
Yeah,
yeah. You know what I mean?
Yeah.
Here's the Dow. Same type of situation. You got this. Let's zoom out a little bit here. Let's get rid of. We already know what those highs are, so let's remove that and maybe do this.
And Blake, a lot of the bears are out. I mean, I'll just not that I think Steve is great, but Steve has been bearish for a long time, and holding short positions even when he's been underwater. He's not short right now. At least I don't know if he is or not. But it's like a lot of the bears are thrown in the towel here, looking for new highs, myself included, think that we could get new highs. So a lot of the bears are just so ground out from trying it that they're, now they're going to wait for a new high. Maybe that's a hook. It doesn't happen.
Yeah. Hey, Raj asked real quick. He asked via Twitter. He asked, "Hey, what's your view on gold, Dale?" I'll pull up my chart so you can kind of.
All right. Well, I think that after a pullback in the yen, if the gold doesn't break out, that we'll have one more trip down towards Blake's red line down there that comes in around 14.5 or so. But it's definitely a bullish formation, and I can't get bearish gold at all except for scalping it. So right now, I think there's a shot for a scalp wrong over today's highs, looking for maybe the red line over the next couple of weeks, because I think yen can make a move after a pullback to the 109, 110 handle, and that's normally negative. And rates also. So if I'm right about yields going back towards 190 on the 10-year, that also could pressure gold.
All right. Well, there you go, Raj. All right, man. Well, Coach, I'm going to let you take over. I know you have your interview coming in, and I want to thank everybody for hanging out with me today. I think Steve's coming back. It was fun. IMF cuts global 2019 global growth estimates to new post-crisis low of 3%. That doesn't mean anything. Yeah. But it was a headline anyway. All right. Yeah. Hey, you guys, thanks for hanging out with me today. And then, and I think Steve will be back in the saddle tomorrow. He took a little bit of time off after he's been filling in for me for the last few days while I've been out of town. So thanks for hanging out with me today. And Coach, I hope your computer's back up to normal.
Thank you, Blake. It was fun.
All right, guys. Yeah, it was fun. You guys have a great one. And Dale, I'll leave it for you.
Okay, buddy. Good hunting today. So I'm looking for Richard. I'm looking for Richard Abel. Let me get my screen up here. Okay. Disabled share. Okay, so Richard, I'm on kind of a different, okay, here we go. Save screen. Share screen. Okay. Oh yeah, let's go with this. So, I don't know where. So Richard, I'm looking for you. I need to find the drop-down menu. My fault because I had computer issues yesterday, so I'm just looking for.
By the way, Coach, I see your screen with it's got a wave on it. And
Yeah,
okay.
can you help me out, Blake, and see if you could find Richard Abel in the attendees list because I came in a different way. Richard, can you raise your hand?
It's Richard Seeley. It says hello, Dale. Is that it?
Okay, that's probably it. Richard Seeley.
Is that you, Richard?
Yeah, because it's Able Trading, so it's Richard Seeley.
Okay.
And if you just make him a presenter or a panelist.
All right, let me see. How do I do that? Give me a second because I don't normally do this. Attendees. Oh, okay. Or promote to panelists.
Yep. And then unmute him.
And panelist. And he should be coming over soon. I don't. Oh, there he is. Let me unmute him.
Thank you, Blake.
You're welcome. Richard, your mic should be on.
Good morning. Good morning. Can you hear me?
There he
Got
is.
you, Richard. Thank you very much.
How are you guys?
Good, good. I hear an accent.
Yeah, I'm British.
Okay. Well, thank you for spawning America.
Oh, no, you're welcome. It's my pleasure.
So, Richard, there's a little green box to share your screen. It'll say new share, and you click that, and then we'll be able to see your setup.
Okay.
See it?
Okay, you should be able to see that now.
Okay. I don't know why I can't. Okay. See, there we go. Okay. Beautiful, Richard. All right, Richard. So I noticed you on Twitter. I think that we had something in common. I think it may have been your work with RSI. Was that it?
Do you know what it was a long time ago that you actually that we made contact, and it was a couple of years back, I think. And then
oh, okay.
Yeah, and then initially, and then I just wanted to, work a little bit more on developing my strategy, and then I thought it'd be a good time. I had some wedding plans with my brother, and it just fell by the wayside for a bit. And then I made contact with you again to come on and talk to you.
Okay, so why don't you tell us a little bit about your journey, Richard? I mean, how people usually have a long and winding road before they end up in the trading business. What were you doing prior, and what was the catalyst that brought you into this?
So I left school, went to college, and got a trade as a joiner and a carpenter. So I was on the construction industry prior to getting into trading, and that was from '94 up until around sort of 2007, when I opened up my first account. And I was always an avid reader of the stock market and trading in general, and the financial industry. And yeah, it was essentially I never felt comfortable in the building industry, to be honest with you. It was always something that I felt that was always a stepping stone. And then Yeah, in 2007, I opened up my first account, and that was essentially my first trade, and then trading the FTSE 100, CFD, and spread betting, and yeah, that was
Okay.
up to 2007. Yeah.
And your background in TA and technical analysis, how did that evolve? I see you have a lot of things that you consider in your trading. We'll get to that, but did you have any people that influenced you, or that you learned some methods or techniques from?
So '07, I opened up my first accounts, and then 2007 to 2009, I just spent my time blowing up some accounts, some small accounts, and learning the hard way.
Mm-hmm.
And then 2009 to 2014, I was self-studying and just tried every method under the sun, from day trading, as every new trader wants to do, because it's fast-paced and it's a lot of action, and didn't really gel with it. I sort of realized that was a quick way to, again, lose money. And then I started to apply more of a swing trading and methodical approach to trading. And I picked that up from various online self-study, and then price action was a very big part in studying support resistance, also divergences and oscillators, and then just making sure that my discipline was in check when obtaining that experience. And that's essentially, it's been developing since 2014. I've just been honing that methodical approach, and then there's no real influence. I had some studies that I done, but other than that, it was really just a self-study and a long winding road, as you put it.
Okay, so we're looking at Aussie here. Why don't you tell us what we're seeing, because it looks like you have a lot of different envelopes and bands and dotted lines.
Does it look very messy to you?
No, I mean, it doesn't bother me. I mean, art is art. Art is art, right? So
absolutely. I mean, to me, it's a very. I'm on the weekly chart here, so what I can see, if I go out to go back a few years there, you can see that it's broken below these major lows. And I think what Blake was saying as well about gold and yourself, I think you mentioned it might do a retracement before heading higher. And obviously there's a big correlation with gold and Aussie dollar. And I just, with this chart, with this weekly chart, there is quite a large divergence here on the MACD. And can you see that? Yeah.
Yes.
So there's quite a large divergence here, as according to here. So I just think the Australian
like a wedge.
Yeah, it's diverging, all of 2019, and I think it's just trying to put in a bit of a base, and that correlated with gold, about 70 or 80% with gold.
I tell you, not the last year, because gold skyrocketed, and obviously you've said
so there's been a decoupling, from the market. So
that's the one thing about correlations; they work till they stop.
And yes, exactly. But I think there might be, there's certainly, from my perspective and my conviction, there's certainly a perspective of this long divergence on the MACD. You've also got this very small divergence.
So in your view, Aussie's going to catch up with a move to the upside to the move in gold, or gold's going to regress to the mean to reflect the weakness in Aussie? Which is it?
I am bullish.
Or all of the above?
I'm bullish Aussie dollar.
Okay, got it.
Yeah, I'm currently long Aussie dollar.
Okay.
I think he's put in a good base. I mean, look, obviously I could be wrong. This is just on probabilistic terms, but the fact that it hasn't, it's this breakdown.
It's taken a lot of we've had a breakdown without much downside progress. Is that what you're?
Yeah, and there's little, to me, there's little details that can be extrapolated from that. So you've got this support where there's been a bit of business, this whole zone here where this red line is, and I think a lot of people are probably quite bearish, and they're probably long dollars and short Aussie.
Yeah.
And I think there's quite a lot of people on the wrong side of the trade. That's just my view, but I think that there's people that are short from where it's broken down from this long-term trend line. It's broken these support this support level where there's been quite a bit of business been done. And I just think this is going to, you know, with coupled with gold, the decoupling with gold, I just think this is going to head up and stitch up a lot of people that are short.
Okay.
And I think it's going to head up to around the 70 mark for a first target, but it could keep going all the way up to, you know, 72, 60, potentially, you know, if there's no big macro catalyst in the background, you know, with China and the States and stuff and the Fed. So we'll have to see.
Okay, well then maybe Aussie, rather than the correlation with gold, has been trading more on trade war fears with China than precious metals, which, you know, it's a very commoditized economy. That right now it's linking up with what China's doing rather than gold.
Absolutely, yeah, it reflects that, I think.
So if we're going to get this pop, that technically you're starting to get some hints that could happen, it may have something to do with the situation getting better on the trade war.
I've been reading some other research, and again, I don't want to go into a deep dive on the macro side because I'm not really about that. I mean, that's a theme that runs through in the background.
Yeah, you do. Yeah, you talk about that over a shot of tequila and a beer. Doesn't help you trade, right?
Absolutely, yeah, absolutely. But so I just think I've been reading some research out of I think it's out of Norway actually, and there's a bank there, and they're writing some really sort of contrarian stuff. But there's a view that Trump is playing this extremely well into. He think they're saying that there's already like a deal on the table, but it's just the timing of when he delivers that for the election. I don't know much about American politics, but that's
either do we. Either do we Americans.
Well, I think that
in this environment, anyone who says they know, I don't know, you know, they're on a flashback from an LSD trip in the 60s. Anyway, so Aussie, let me ask you this. So when you're bottom picking a market like this, do you scale in, piece in to just have your toe in the water? Or are you just, you know, I'll do my one lot, my stops here, and I'll just trail it as it moves in my favor?
Well, that's, again, the cliche, isn't it? That you're told when you're starting to trade or when you're learning to trade not to pick tops and bottoms. However, that's something that's
all I do.
Oh, yeah, well, it's good to hear that. I mean,
and my nose once in a while.
Sorry, say that again.
And my nose.
Yeah. So
during the allergy season.
Yeah. Yeah. I mean, to be honest with you,
why me
on this trade,
I can't help myself.
No, Dale, I like that. I like a bit of humor. It takes out the edge.
I mean, why be honest with me? Why make an exception?
All right.
Or a special thing. So anyway, anytime I hear that, I think in my head and I blurt it out. Okay, so let me be honest with you, Dale, and it makes me think like, well, normally you're not, and for this statement, you will be. You know what I mean, buddy?
Absolutely.
All right, go ahead and be honest.
So when I am looking at the higher time frames, such as this on the weekly, my conviction is 100%. So I'm not going to scale in. No.
Okay.
What I will do, I will go straight in with my 1R risk. Once it's developed and the conditions have materialized, and I'm happy that everything, there's nothing that's telling me do not take this trade. So in my framework, it's essentially an A-star setup. Everything's lined up. I'm quite happy with where we're at, and I'm just gonna go for it. That's not to say that on the longer term time frame, because it is a weekly, I will monitor it and I may add more risk when I'm taking risk off. So if it pops up over 70, for instance. So let me just.
A big round number. Okay.
Yeah. So, well, actually, yeah, I think
690.
even 69. If it was to close above 69,
yeah,
I would look for probably a pullback, and then I would probably take some risk off, and then essentially add that risk back in by moving my stop. Only on the weekly, if it was on a lower time frame, I wouldn't tend to do that. But on a weekly, I think there's a bigger move possible. And then I'd take some risk off and add some more, and just and take some off the table. Always feel good to take some profits and then add some more in. As I say, I would make it clear that I wouldn't do that generally on a daily chart or 4 hour. Sometimes go down to a 4 hour, but I'm generally on a daily or a weekly swing trader. So that's the answer to that, really. I don't really scale in. If I haven't got that conviction, I don't really like doing a toe dip, really, because then to me that's telling me that trade is not really. It hasn't convinced me that I should be in the trade.
Okay, so being patient is very important with your methodology and the market giving you some kind of tell. So we have your view on Aussie. Were there any other instruments on your radar?
Well,
Richard,
just going back over what
share?
you just said, then the patience game is the holy grail in trading, in my opinion. I mean, the mantra that I go by, or Able Trading goes by, is observe, confirm, and then act. And if you methodically follow those three subjects and them titles, and then you follow it, and you're patient, and you sit on your hands, and you don't try and impose yourself on the markets. I think that's a major flaw and it wrecks a lot of traders, where they try and impose themselves on the market rather than let the market tell them, look, this is probably going to go your way, now you should get in. And I think that was the holy grail for me when I ditched discretionary and just traded a plan. And that was the bit that, that was the part, the final part of the jigsaw, so to speak. So other markets, I'm actually quite bullish. I think Aussie CAD as well. Yeah, Aussie CAD as well.
Nice. So you have two drives.
To be clear, because I've got a long Aussie dollar trade on, if I was trading Aussie CAD at the same time, I'd ensure, because that's exposure to Aussie dollars, I'd ensure that my overall book exposure is adequately hedged, or I would decrease my risk slightly to ensure that my overall exposure on my book isn't too weighted to one currency. Okay. So again, with this, I think I'm bullish Aussie CAD, but I think in general, it's
not as ready as Aussie.
Aussie dollar looks more of, like I say, it's got more of a base correlation with gold and the decoupling with gold. So I like that. Okay. But what I wanted to go through with you is Aussie yen.
Okay.
Let me just go through Aussie yen. Let me just delete all this.
So this is your, used to be Chris Laurie's tell for risk, Aussie yen. I don't know if it is anymore.
Well, I have my alert set that Aussie yen is, it's a bit of a bellwether, really. You're right. So you can see that we've got, let me just try and neaten up the chart a little bit. So this blue horizontal support line, where, it's quite a secular support line all the way back since, the last time Aussie yen traded actively below that blue line was this year. The last time it actively traded below that line was in 08 and 09.
Yeah.
So there was a little bit of a clue there that I think that potentially we could be, we're not quite ready, but I think there could be some further downside, which with a risk off environment, it would kind of tie in with the doom and gloom that's been, the news and everything else. I mean, I know it's a little bit more positive at the minute, but over the last, generally it's been a bit gloomy, hasn't it? The global growth has been slow, and there's been, a bit of a bit of a gloomy outlook, shall we say, on global growth. So when Aussie yen just dipped below and then it traded below that blue line, and that's the first time it's actively traded. Again, my thoughts straight away were everybody's going to be, not everybody, but most retail traders, or shall we say, you know, maybe more amateur traders are going to be going, look, it's broken that that support level. It's a big support level, and they're all going to get short. Whereas I'm a little bit more contrarian, where I'm thinking, well, everybody's getting short, then I want to be long, because I believe there's going to be a stitch up. I believe what will happen, it's not manifested the conditions that I would trade yet, but I do believe this will have another rundown to take out the August low, and then I think it will head higher and take out anybody that was short. And that's, so I'm not trading that yet. I've got my eye on it, but that feeds into my Aussie CAD and Aussie dollar thesis of being bullish.
Okay.
Does that make sense?
Yeah, and I was wondering what your thoughts were, since you do mentor and teach people. I become skeptical and jaded when I have a breakout or breakdown, and it gives people too many opportunities to trade that zone of the breakout or breakdown. To me, it's saying, okay, you know, most real good breakouts, they just happen and maybe you get one retest, but they usually don't give people, you know, 2 weeks to say, well, you missed the breakdown, but I'm a nice guy, I'm Mr. Market, and I'm going to let you in at the same price, even though you didn't react when you should have. What do you think of that?
Yeah, I think now that, is it 60% of the market is machines? Is that correct?
Oh yeah, I guess.
Right.
Yeah.
So it's faster.
That's a good point. Yeah, I keep thinking in human terms because, you know, that's what I deal with. But anyway, I get jaded and skeptical if a market's giving me too many opportunities to enter at a critical area.
Yeah,
It feels like they're trying to suck me into something, and it shouldn't give you, you know, real good breakouts really shouldn't give people 2 weeks to think about acting on it.
Look, I absolutely agree, Dale. I think when I've been mentoring someone recently, and we have like a chat room that we chat with in daily, and he will say to me, not so much anymore because he's come a long way in 2 months. He's now consistent, but he'll have his ideas and his analysis, and then he'll say, "Oh, do you think I'm sort of bullish here, or I'm bearish there?" And then not too often, but probably more often than not at the beginning, I was like, well, I'm the opposite. So the reason what you're saying actually aligns exactly with how a lot of, dare I say, retail traders or amateur traders or aspiring traders, new traders, that's the way they're thinking. And the market has this incredible knack of, like you said, sucking people in with fake outs and creating this environment where you're adamant you've got it correct, and the majority, I don't know what the percentages are in the States, but I think in the UK, if you just look at spread betting brokers, the percentage of traders that are wrong are around the 80% mark. So I believe that's a lot of the liquidity that is getting completely annihilated.
You know, this may not be on your radar, but I would like to wrap it with that, and also have you show your website. You have a nice little website that talks about your philosophy and where people could get involved with you, Richard. But being from the UK, do you have a view on cable? And what do you think is going to happen? Do you think that there's going to be a deal?
Do you know what? No one really knows if there's going to be a deal.
Yeah, I'm just asking for an opinion. You don't have to know. What do you think? And if you don't, you say, you know, who the hell knows? That's valid too. Is that where you're at? Who knows?
I don't think there'll be a deal. I think there'll be some concessions. I think there's going to be. I won't trade sterling. I'm staying away from it on all pairs at the minute. It's just too volatile. It's too sentiment driven, and it's Yeah, it's to be honest, no, no one's got a clue, but I don't think there'll be a deal done before the 31st. No.
You don't think there'll be a deal, so it'll be a hard Brexit?
I don't think we'll leave on the 31st.
Oh, we won't leave. Okay.
I don't think we'll
Okay,
leave on the
you won't
31st.
leave. America already left, but you're not gonna leave. All right. So why don't you show your website, Richard? You got a nice little website there, and
Yeah,
I
one
went to it
second. Let me
yesterday to
just-
do a little look at what you're doing, and I think it's great that you're sharing your, what you learned with blood, sweat, and tears over the years, and trying to help people out survive a very difficult game.
Indeed. So it's just loading up. Let me just swing this over. It's just loading. Sorry.
Okay. There we go.
Can you see it now?
Yes, observe, confirm, act is your philosophy and tagline.
That's the mantra of able trading,
Yeah.
correct?
Okay. And is that your desk with a view out through the
That's
blinds?
the desk. That was actually my the office that I had. I've actually moved office since, so I need to update the image actually.
Okay.
But yeah, that's why I traded for 6 years there.
Okay.
At that
Yeah,
office.
you have a little spaceship, some nice screens. So address is abletrading.com.
able-trading.com.
Okay. All right. And cost of people to work with you, or you have
Well, I have a course where you can
like
access,
a book, huh? Ebook?
Sorry?
An ebook?
There's a free ebook. I'll tell you what. So we go back to the homepage.
Okay.
You've got a free online forex course, which is for absolute beginners. That's absolutely free, and that's just a text course. That's free. And then you've got the video course, which is 499 sterling, and that's an online video course which you can just access directly from the website. You can just start the course, and then you can just register and pay. So that's $499, and mentoring is on a case-by-case basis after you've completed the course and we've had a conversation.
Okay. Well, I want to encourage people to take a look and consider it. And Richard, I'll be really appreciate you giving me some looks and some markets to consider. And it was a great conversation with you. And don't ever let anyone say your charts are too busy, because they're exactly what works for you.
Absolutely. To me, they're spotless.
There you go. And my trading warrior brother, I hope you have a great fall trading season for your own account and anyone whose words you touch and teach. So
That's honestly, it's been my pleasure, Dale. I appreciate being on, and thank you very much for your time.
rooting for you, brother.
And you. Thank you very much.
All right, everyone. That's a wrap for Turnaround Tuesday. That's Richard Seeley at able_trading on Twitter. Correct, buddy?
That's correct. On Twitter, that's correct.
Okay. All right, everyone. So enjoy the rest of the day. I'm going to have to try and figure out how to end this webinar because I came in the wrong way. But everyone have a great day. And remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. All right. Adios.
Thanks, Dale.
You're welcome. Thank you.